Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the broader market. Got a little bit of fan noise in the background because it's hot and I have to wear clothes to make these videos. So looking at SPY. So I headed into this week and today was a nice example of most likely scenario, at least what I was looking for, playing out. And when that happens, it's certainly a lot easier to make profitable trades. So headed into this week saying I am looking for bulls to defend support even after an extremely bearish day on Friday. Defend support and set a 2-day higher low, and on this holiday short week with no trading Friday, I'm going to look for a tightening range to form into next week. So I'm looking for a bounce off support. Now definitely had to sweat a little bit as we dumped to start today. 15 minutes of dump, and and QQQ was the reason for that, the tech sector. So just gonna lay out the plan a little bit. This was before the bell. This is what I'm watching this week. Can SPY and our major sectors give us 2-day higher lows to stay in the tightening range? Watching airliners and cruises for their 4-hour falling wedges. Those went well. We'll look at those in just a second. Lead bulls looking for daily higher lows. And it's all these names that have been extremely strong. And then bears. Can bears see XLF, XLV, and QQQ all break low of Friday? That would be very notable for me. If that happened this morning, I'd throw up my hands and say I'm wrong. That doesn't necessarily mean I jump in a bearish trade. That just means don't look bullish because you're wrong. You're not looking to set that 2-day higher low if all of our sectors are breaking their low of Friday. In the end, it was only QQQ that broke its low of Friday. And all morning, as that was happening, I'm watching QQQ and I'm just staring at XLV and XLF and saying, okay, are they going to break their low and follow along? And as soon as they comfortably held that support, then I looked to buy the dip on QQQ. So I scaled into QQQ this morning on the weakness, had my first entry at 238 and reserved my second entry for 237.50s, but I was a little bit distracted answering questions and too many tickers going on. So we double bottomed at the low of the day, 237.35. As soon as I saw that, comfortable entering my second position and scaled out. Sold half of that position back at 238, so my break even at that point was 237.50s. Then I sold another quarter of my position up around 239, and at that point, no risk. My stop goes under the low of the day, and I hold the position, and at that point, we knew that what we need to see for the bulls to have a best case scenario, and what you need to see when you're coming off of a downtrend and trying to reverse momentum, you need to see a significant bull move in the morning, you need to see healthy midday consolidation to form an hourly higher low, and then you need to see an hourly trend change confirmed into the end of the day with a new high of the day. That is your best case scenario bull day when you are coming from an hourly downtrend and trying to change the trend. Because you can't change the trend dropping to a lower low, and SPY broke its low of Friday with no follow through because neither of our sectors, financial nor healthcare, joined the tech sector weakness. But if you're dropping to a lower low, you're starting from scratch to try and change that hourly trend. So you know no matter how much we bounce in the morning, we still need that higher low and higher high to confirm it. So reminder, lots of bulls still need confirmed hourly trend changes. They want to see healthy hourly consolidation midday, which means if we confirm any 5-minute downtrend, bulls want to see a lack of follow through. And from that point, we're just watching what's the size of the retracement. And the retracement from the low of the day to the high of the day, on SPY we pulled back about 36-37%, set that hourly higher low, big bull surge into the end of the day. I did swing my remaining QQQ quarter position because it's small enough that it's not major risk exposure. And I did also enter a little trade on jets at the end of the day, and then we'll run down our normal sectors here. This is the 4-hour falling wedge we were watching. You can draw it on CCL, you can draw it on AAL, you can choose a bunch of these airliners, a bunch of these cruise liners. They all have this 4-hour falling wedge. The cruise liners have confirmed a 4-hour trend change with a higher low and higher high. The airliners have not done that yet. Anything under $17 is just a lower high, and we are topping out. So I did enter a Jets position, looking for an hourly bull flag. How do you enter on an hourly bull flag? You watch the 5-minute break of support, 1667, 1669. We break both of those levels. We get very little follow through, straight into a bounce. As soon as I see that, I say, okay, that's the potential signal that an hourly bull flag is coming. I'm going to make an entry for the 5-minute high or low and put my stop under 1662 with a little bit of wiggle room. So I entered at about 1666. I put my stop under 1660 and then exited into the end of the day for 2 reasons. Number one, I don't want to swing too bullish positions. I don't want to be too overexposed in one direction. I'm not a swing trader. And number 2, we have not changed the 4-hour trend yet. And the last thing I want to do is be in a bull position. And if we reject from 17 and instead of changing the trend, we form an equilibrium, I don't want to be in that position. Also, more potential headline risk for the airliners than QQQ, in my opinion. So that was the trading day. And we got the ideal close that the bulls could be looking for. But tomorrow is still important because how SPY closed at the high of the day, still a lower high everyday pattern looking back the last 4 days. That has to break. Look at our 2-day chart. Yes, it's a bullish candle. It's got a nice long lower wick, but we need to see enough of a shift in momentum for us to be looking back up to 308, 310, or however high these bulls can take it. And from there, I'm going to just sit back and say hands off. I'm looking for that higher low. I have a bias for this higher low, but as soon as that forms, I'm just waiting for the break. And I'm not going to have a bias on which direction it breaks. There will be a potential top fishing play for bears. The faster we get overextended back to resistance, the better. You know, if I'm sitting here and I want to make another bearish entry, looking at that resistance, this is the S&P 500 futures chart. This is the 12-hour time frame. Don't like the 12 hours, so we'll stick to the daily. But I'm just looking at, I want to see these bulls shoot up tomorrow. Give me a 2% green day tomorrow, and I'm going to top fish these resistances for a bearish entry, because at that point, the 4-hour RSI would be extended. Another setup to potentially be watching for on this is a 4-hour inverse head and shoulders. We had a 4-hour bear flag this morning, and while SPY broke to a lower low, the futures chart did not, because this low was hit in extended hours. We held support, broke resistance, and now if we fail to break 30.93, we'll be watching for the potential of a 4-hour inverse head and shoulders to try and give us that higher low. So now that I see that, you know, I was ready to say this video that tomorrow we have to see the bulls prove it, but we don't. Because we could top out compared to that level, and then we could form this higher low on Wednesday and then try and close the week strong. The bottom line is the burden of proof short term is on the bulls. They did some proving today. We did confirm the hourly trend change, but I do want a bit more. And then we have a nice tightening range to be watching next week. If the tightening range breaks bearish, the odds of our monthly lower high being set will increase for me significantly. And if it breaks bullish, then there's still possibility that these bulls keep their momentum going. IWM stood out very strong today. If you have any insight into IWM, I'd be curious to hear it. Because this move, this V-shaped recovery from the low of the day, very unusual. Because XLF and XLV, the 2 largest sector holdings in IWM, were not doing this. And then I looked at the top holdings, the top few companies in IWM, and they weren't doing this either. So if you can tell me where this strength came from, as far as who in IWM saw that kind of move, and if it's nobody, then that just tells us that someone was loading up on IWM itself. Either way, it's very unusual to see that kind of V-shaped recovery. You know, if the whole market did it, then yeah, it makes sense. But you look at that move, and you look at the 2 sector largest holdings, IWM, yes, it did see that bull move, but again, not nearly the same. And XLV, much more slow and drawn out. Again, IWM was V-shaped, where we went from that low to that high, 3% in under an hour. And you're not going to find that on any of those sectors. So for IWM, we're looking for the same thing. Is this our 2-day higher low forming? And it's a bit more convincing on IWM because we're at least building this base of support. Wednesday, Thursday, Friday, we built this base of support, and now the momentum is shifted back to the bulls a bit in the short term. High, low, lower high, working on the higher low, just a little bit more follow through, and then the most important resistance, 146.69. So QQQ, nice strong end of the day, big bull volume. Daily time frame, we're still in an uptrend. Anything above 231.47, I consider a daily high or low. So that's what I was talking about with that screenshot where we're looking for our lead tech bulls to give us daily high or lows. So a nice strong close. I do want to see the high of today break tomorrow. The last thing the tech sector bulls want to see is a failure to break the all-time high and then a drop down to break the low of consolidation. So we're watching all of our lead names. Amazon, trying for a daily high or low. Microsoft, trying for it. Apple was a lead tech bull. And again, it's just the same thing. It is the same thing that happened back in June. SPY saw the big drop back in June. Oh no, this is the top. The bears are about to take over. And we had these guys saying, well, wait, these lead tech bulls that control the majority of the market, they're just fine looking for a higher low. We held daily 12-period exponential support. Same thing happened. Oh, the bears are taking back over. Well, we're just looking for these names to give us daily higher lows, still holding 12-period exponential support. Very, very similar. So the question is, can we go back to a new all-time high on names like Apple and Microsoft? And if the answer is yes, then the odds of that 2-day time frame breaking bullish will be very high. If the answer is no, if we fail to break the all-time high and then drop down and break that support level of 351.28, that's when that 2-day pattern is going to break bearish. I do believe the key to how this tightening 2-day range breaks will lie in our lead tech names. If they lose the daily uptrend, bear break. If they hold their daily uptrend, probably a bull break. Healthcare. So healthcare looking for a 2-day high or low. It's very tight. Not much change today. I need to see a bull break tomorrow of 98.57, 78, and 83. Break those 3 levels and our 2-day high or low is set. And we're then looking back up to a resistance of 101.34 in this little equilibrium. Financial sector had the bear break. It is our clear lead bear sector. And even today, it wasn't impressive. It started the morning strong, but gave it all back. And we did form a double bottom at the low of the day by 1 penny. We broke the low of the day by 1 penny with no follow through. I need to see a break of this inside bar bullish, but even then, I'm just looking for anything under 25.12 to be a lower high. We're in a 2-day downtrend on this sector. And what's also notable is that for the cruises and the airliners, they've been significantly correlated to the financial sector over the last couple months. And they had a big day today without the help of the financial sector. So they are positioned well that if this inside bar breaks bullish on XLF, cruise liners and airliners are positioned well tomorrow to benefit from that. Biotech sector, just like our lead tech bulls, is looking for a daily high or low as well. You need an hourly trend change to set that daily high or low. Low of the day, high of the day, big bounce, 3%. Higher low, pulled back more than the bulls would have liked to have seen, and now it's an hourly equilibrium forming. So we'll watch to see if this hourly equilibrium breaks bullish, daily high or low is set, and the bulls attempt to resume their uptrend. Could this be a bull flag? Yes. It's coming off the all-time high. It was a significant move from 97 to 116, and the retracement, holding exponential support. This is still a potential daily bull flag. SMH, working on the 2-day high or low. Need bull follow-through, but it's tightening up just like our other sectors that we're watching. The VIX, very choppy the last 4 days. Back and forth, 4-hour equilibrium. High, low, lower, high. 31 is key support. If 31 holds, that's notable for these bulls. And if it doesn't, then the bears are right back into control, and we're looking at the low of consolidation, 29.30. Gold, not a whole lot going on. The bottom line is bulls are holding on, but we're not seeing significant gains. I have absolutely no FOMO not being in a gold position because every day I'm waking up and it's up 2.2%. It's not like I'm missing anything. So it is still a daily uptrend. We do still have a lack of resistance after 1779. I take that back. There is a little bit of resistance right under 1800. So there is a clear resistance zone right up there. But if we do not break 1747 support, just use your simple if-then scenarios. If 1747 support holds, then the bulls have complete control on the daily time frame. Yes, it's not flashy and exciting, but it's holding steady. Silver's tight. 3 days we've been trading within the range of Wednesday, and we need to see it break. Silver bulls haven't really proven much. Again, you're not missing anything in silver over the last month. Miners, daily high or low established, nice strong close at the end of the day. If we get a bull break of 35.84 on GDX, the daily uptrend continues, and we then shift our focus back out to 37.49 weekly resistance. So the bull miners had a good day with gold holding well, and of course the S&P 500 having a big bull day. That's best case scenario for bull miners. Oil had a nice 4-hour trend change. So low, lower high, higher low, bull break, 4-hour, or I should say daily time frame. Could this still be a head and shoulders? I don't like the way it's shaping it up for clarity. I wouldn't put it in a textbook. But we can simply say if we fail to break 41.63 and we drop down and break 37.08, we will see the most significant shift away from the bulls on the daily chart that we have seen since our low. And that's a big if, because right now we're closing strong and there's no sign of that. We would have to drop $2.50 and the bulls need to go $2 to get to resistance. So we're slightly above the midway point to favor the bulls. Natural gas had a very significant bounce from the low, flushed on the way down, V-shaped recovery, clearing out the order books in both directions, but we rejected from the daily resistance 1654. So what I'm watching now is the potential of an inverse head and shoulders. If we get a more significant pullback from here, we've got our left shoulder, head, neckline is within a penny, and then we look for the higher low to try and change this trend. The weekly 12-period exponential resistance is currently rejecting the price for the 12th week in a row. If we change the 12-hour trend, if we change the daily trend, there is the potential that it becomes support for the first time. Let's see if the bears flushed down and broke to, I don't know if it's all-time lows, I think it is. Let's see if we flush to those all-time lows to trigger the final stops before the bull move takes place. I would not put it behind these market sickos pulling off a move like that. But the resistance is very clear for now, and the burden of proof is absolutely on the bulls. It is certainly warranted to be very skeptical of natural gas bulls. So tomorrow is a fairly big day as to whether or not the bulls can confirm 2-day higher lows are set. If they are, we lose clarity, in my opinion, for the rest of the week. Because again, if we're in a choppy, not choppy, but if we're in a tightening 2-day time frame and our ranges are shrinking, that's when I pump the brakes as a trader and wait for the breaks of those tightening ranges. Hope you had a good weekend. Hope you had a good day. We'll see you soon. You got blue oyster mushrooms in a bag. You poke a hole in the bag, and these are already going really fast. I looked at them earlier this morning, and it was not like that. Garden greens going in soup. 21 hours later. 24 hours later. Another 24 hours later. 10 hours later.